Picture this. You've been searching for a home in Canada for months. Prices seem sky high, listings disappear fast, and affordability feels like a distant dream. Now imagine the government announces a reduction in immigration targets. Suddenly, the very engine driving housing demand is slowing down. For years, immigration has been one of the key forces fueling Canada's housing market. New residents mean more renters, more buyers, and increased competition, especially in urban centres like Toronto, Vancouver, and Calgary. But with the federal government lowering immigration targets in 2025, the ripple effects are already being felt. Today, we're diving into how these changes impact housing supply, prices, affordability, and the broader market, and what it means for buyers, sellers, and investors. 1. Canada's housing demand. A brief background. Canada has long relied on immigration to fuel population growth and economic development. In the last decade, urban centres saw unprecedented housing demand, pushing home prices to record highs. Rental markets became fiercely competitive, with vacancy rates plummeting. Builders struggled to keep up with the rapid influx of residents, creating affordability pressures. Immigration has historically been a double-edged sword for housing. While it boosts the economy and fills labour gaps, it also increases demand for homes faster than supply can catch up. 2. What's changing? Immigration reductions in 2025. The federal government has reduced annual immigration targets for 2025 in response to economic shifts, budget constraints, and labour market adjustments. While exact numbers vary by source, the overall trend points to a slower growth rate in new residents entering Canada. This decision directly impacts housing because fewer immigrants mean fewer people entering the housing market immediately. Rental demand may slow in the short term. The urgency for developers to build new units could ease slightly. 3. Immediate effects on the housing market. A. Demand pressure. Eases. With fewer newcomers, competition among buyers may soften, especially in major metropolitan areas. Homes that would have sparked bidding wars might now linger on the market longer. This provides some breathing room for Canadian buyers who have been priced out. B. Rental market implications. Canada's rental sector has faced historically low vacancy rates, particularly in Toronto, Vancouver, and Montreal. Immigration reductions could slightly increase vacancy rates, slow the pace of rent growth, reduce immediate pressure on landlords to raise rents aggressively. C. Regional variation. Not all markets will feel the effects equally. Toronto and Vancouver. High immigration cities may see the biggest cooling in competition. Smaller cities, moderate impact, as local population growth is less reliant on international arrivals. Suburban areas may see slower home appreciation as migration patterns adjust. 4. Long-term implications, EAA, supply-demand balance. Canada's housing market has been plagued by a chronic supply shortage. While lower immigration may reduce demand slightly, the underlying supply gap remains large. According to the Parliamentary Budget Office, Canada still faces a shortfall of approximately 690,000 homes by 2035. Thus, even with fewer new residents, home prices may stabilise but are unlikely to collapse. Supply constraints continue to drive long-term affordability challenges. B. Impact on builders and developers. Developers may respond to reduced demand by slowing new construction projects, shifting focus to smaller or more affordable units, targeting markets with continued high demand, e.g., regions attracting interprovincial migration. Developers will need to carefully balance production with actual market absorption rates. C. Investor behaviour. Residential investors may see slower appreciation rates, but can benefit from stabilised pricing and lower risk of overheated markets. Commercial investors remain largely unaffected, though mixed-use developments could experience shifts in demand for rental versus ownership spaces. 5. Broader economic considerations, AEA. Labour market immigration supports Canada's workforce growth. Fewer immigrants could lead to shortages in certain labour sectors, potentially slowing economic growth, changes in household formation patterns, which indirectly influence housing demand. B. Affordability outlook. While fewer newcomers may slightly reduce upward pressure on prices, affordability challenges remain acute. Canadians still face high mortgage rates, elevated property taxes, and wage growth that often lags behind housing costs. C. Policy implications. Policymakers may need to encourage housing construction in alignment with population trends, explore incentives for first-time buyers and renters, balance immigration levels with broader economic and social objectives. 6. How buyers can navigate this trend. Patience pays off. With demand easing, buyers may face fewer bidding wars and more room to negotiate. Monitor market shifts regionally. Urban centres will adjust differently than smaller cities. Research local trends. Focus on affordability. Even with slower demand, pricing remains high. Consider neighbourhoods with long-term growth potential. 7. How sellers should respond. Realistic pricing. Overpricing could lead to longer time on market or cancelled listings. Highlight value. Stand out through upgrades, staging, or incentives. Consider timing. Selling before any potential slowdown accelerates may be advantageous. 8. Investor insights. Residential rentals. Opportunities may emerge in previously overheated markets as competition eases. Diversify portfolios. Consider commercial properties, mixed-use developments, or regions with sustained population growth. Watch for policy changes. Immigration targets may adjust again, and incentives for housing construction or investment could emerge. 9. Key takeaways. Immigration reductions are cooling short-term housing demand, but the underlying supply crunch remains. Buyers gain slightly more leverage, sellers need strategic pricing. Investors can find opportunities, but careful analysis is critical. Long-term housing affordability still depends on construction, policy, and demographic shifts. Canada's housing market is always in flux, but immigration reductions in 2025 represent a new chapter. While the immediate effect may be a temporary easing of competition, the housing supply gap ensures that prices and demand will remain significant factors. Now it's your turn. Are you a buyer feeling relieved by reduced competition, or still struggling with high prices? Sellers. How are you adapting to the shifting market dynamics? Investors. Do you see opportunity in these changes or caution ahead? Drop your thoughts in the comments. Your experience matters, because understanding these trends is key to making smart housing decisions in Canada's ever-changing market.